What's up, everybody? This is the Figuring Out Finance podcast. My name is Chris, and I'll be your host today. We're continuing on the Rich Dad Poor Dad series, chapter 3 and 4 today. So they were a little bit smaller chapters, so I thought I would just combine them. So we're going to be covering what minding your own business means and the history of taxes and the power of corporations, along with my own story about how I almost missed out on over $2,000 just because I was trying to do my own taxes through TurboTax. So stick around for that story near the end. But chapter 3 starts out with a Ray Kroc story about how he was invited to talk to a group of college students, and he was asking them what business he was in. So they all thought he was in the hamburger business, which is what you would think, but he said, no, I'm in the real estate business. So at the time of this revision of Rich Dad Poor Dad in 2017, McDonald's was the largest single owner of real estate in the world. So he really was in the real estate business, owning that many chain stores in the U.S. or in the world. So that's focusing on his asset column. So minding your own business, is the main point of chapter 3. So what does this mean? This is something I really struggled with the first time I read it. I had really no idea what he meant, and he explained it in a ton of different ways. But he explains the professional skills you're learning in school prepare you to enter the workforce and work for money. So this is going to be interesting as we keep going, but that's a great example of book smart versus street smart. So in the story, Robert's rich dad, he dropped out of school. He didn't even have his GED from high school, and he learned about money, his financial statements, while his dad went to school and got book smart and then struggled financially. So the professional skills that he learned, or his poor dad learned, were helping him in school and make a good pay working for himself. However, he worked for somebody else. He wasn't minding his own business. So one of the quotes that kind of lead into this is, there's a big difference between your profession and your business. Robert says, I often ask people, what is your business? And they say, oh, I'm a banker. And then he asks them if they own the bank, and they usually respond, no, they just work there. So in that instance, they confuse their profession with their business. Their profession may be a banker, but they still need to own their business, or they need their own business. So their own business would be thinking about their asset column. So they're not worried about what comes onto their income statements because that's their job. Their job is to create their own life in their asset column that pays for their life. So the main point is that these people are spending their lives minding somebody else's business, making that person rich, where your business revolves around your asset column and not your income column. So focusing on a job focuses on that income column, and they only help you if you're using them to buy income-generating assets. So focusing on minding your own business, building up your own asset column, is going to help you in the grand scheme of things. And the real assets he lists in the book are stocks, bonds, income-generating real estate like rentals, notes, royalties, and anything else that has value, produces income, or appreciates, and has a market. So focusing on that for a second, those are real assets because you're getting a real return. So something that's a little bit more active than the stocks and the bonds and the notes are the income-generating real estate, which is what I'm focusing on in my own business, turning my personal home into a medium-term rental eventually. So that would be minding my own business. And then to follow it up and kind of end that little note is, if I have to work there, it's not a business. It becomes my job. So that's where you have to start to separate am I an employee in my own business, or am I a business owner to where I could walk away for a year and everything will be running fine without me? That's how you know if you're a business owner or not. But by having your own assets that are taking away from your job, that you don't have to rely on that job. You already have your assets bringing in income for you. That's minding your own business. And that was something I really struggled with a couple years ago when I read it when I was still in college, because, it just wasn't there to be able to quite understand that yet. So that about wraps up chapter 3, a really short chapter, but chapter 4 is a little bit more interesting because it kind of applies to everybody, because we've all heard somebody say tax the rich, and why they think that's a good thing is a little bit kind of just weird. So it sounds like the good thing to say, but it doesn't really make sense in the grand scheme of things because of what the rich do to avoid paying taxes. So going back into the history of the taxes, the idea of taxes was made popular and accepted by the majority by telling the poor and the middle class that taxes were created only to punish the rich. This is how the mass voted for the law. So that's how taxes started. They were intended and told to the public that it was going to punish the rich. So that got all the poor and the middle class to vote because they thought the rich were going to have to be paying more tax. So, but the rich will never be taxed. So more and more often we see the government use the tax laws to provide incentives to business owners and investors to create jobs and housing. So that is real estate investing. So these incentives reduce the taxes of the rich. So the only place the government to drive tax revenue is from the middle class. So it's the knowledge of the legal corporate structure that really gives the rich a huge advantage over the poor and the middle class. So, reading that again, taxes were created only to punish the rich, and that was what was told to the poor and the middle class, which got them to vote and put taxes into law. But the rich use their own business through the tax laws that are provided by the government with incentives in there to have business owners and investors create jobs and housing, which is what they do with their business. They create jobs and housing. So these incentives are kind of hidden in there with what they call tax write-off. So the more debt they take on, the less they have to pay in taxes. So they could kind of show that they made $2,000 a month off of a rental property, for example. And with all of the things that they've done to the house to fix it up, they're able to write that off a certain amount. So what they turn into the government every year isn't that they made $2,000, but they can say, hey, look at all of this debt and basically look at all of this debt that I'm taking on myself, and then they're able to get write-offs for that. So I was never taught any of this in school. But I think it's just not because not enough people understand this to even be able to teach it. And that's where we really struggle at, because why am I sitting in a classroom learning I have a picture on my phone of what was on our board almost every single day, and we were learning about different football offenses in some sports management class. So why am I learning about that, wasting my time paying thousands of dollars when I could have read this book and just learned so much more? I felt like I read 3 books and learned more than I ever did through college and high school combined. So back to the story about the taxes, the rich are using the tax incentives that the government basically says in the tax code to do by taking on debt, starting their own business, and providing housing. The rich just outsmarted everybody because they understood the power of money, financial education, which is a subject not taught in schools. So how do the rich do this? They're able to pay attorneys and CPAs who understand the tax code, which saves them more money. So that's why the rich get richer. It's not cheating because anybody could do the same thing. You could walk into a CPA's office today and say, hey, here's what I'm doing. How can I cut down on my taxes? And he can give you plenty of different options. But the problem is people are just a little too scared about it. They don't understand that. They think the rich are just cheating. So you got to learn the tax code or talk to somebody who's educated on the subject, or just start reading books, and that'll make you want to ask more questions like I was doing. So now, through my own personal investing, I'm able to start an LLC, and track the income and start tracking write-offs that can help me down the road, whether that's on my car, on the rentals, the house, my laptop, space in my house. So there's an extra bedroom in there that I'm able to use as an office. So part of that will be written off the income. So definitely go talk to somebody smarter who's educated on that subject, and they're going to be able to help you in a lot more ways than trying to do your own taxes. So the story I was telling a little bit earlier was I almost missed out on $2,500 tax return just because I tried to save money and do my own taxes through TurboTax. So yes, it's easy. Yes, it's simple. And you can go through that whole process. It takes about 45 minutes. But the problem is there's so many little things that go through filling out your taxes that you could miss. And that's what I missed as well. I mean, it was something that you never really would have seen or thought of, but I almost missed on $2,500. So I got it looked over by somebody else, and they said, yeah, you missed this little box here, and something for college or a college refund. So I just about missed out on that. So moral of the story, pay somebody, whether it's $200, $400 to do your taxes. I mean, me paying somebody $600, which is a lot, to do my taxes would have got me that $2,500. Yeah, that's a gain that I'm willing to take every single day. So $2,500 minus $600, that's still $1,900 in my pocket at the end of the day. I'm going to be paying somebody to do my taxes. It made no sense to me after that to try and even do them myself. So I've had to sit down and talk to different CPAs and really get educated on the subject and learn about LLCs and lots of different things, but it's all learning. So at the end of the day, the people who lose are the uninformed, and the ones who are not and the people losing are the uninformed and not financially educated. So pick up a book, listen to some podcasts, educate yourself about it, and start asking questions to the right people. And then books are only worth $10 to $20. So the three I have sitting on my desk, I don't think I even paid more than $30 for all of them combined. And I've bought Rich Dad Poor Dad for quite a few people now. So hopefully they're actually reading it and it's not just sitting on a shelf somewhere. But $10 to $20, go pick up a book that you're interested in on those type of subjects and making money, and it's easily going to change your life. And then learn what a real asset is and talk to somebody, because you're going to be able to learn those tax advantages and have more money in your pocket at the end of the day. So CPAs do a lot. They might charge a fee if you just go in there and talk to them, but they're always willing to educate people on that subject and how to save more money. And then just learn how to save more on your taxes. Go talk to people. So if you got something from this, please go to the website, leave a comment, send me an email on the figuringitoutfinance.com. Keep listening to the podcast here at the Figuring Out Finance podcast. Go find me on Instagram and TikTok, and go to the website, fill out the survey. If you have questions on money, I'd love to be able to answer them here on the podcast. So thanks for tuning in, and we'll see you next time.